Taking the counter trend trade has been one of the more challenging patterns. I have some pandemic patterns that I want to show you that I'm slowly starting to see. This market has had 3 days in a row, or almost 4, kind of where you have this gap continuation. So the market gaps up. I'm going to show you that with the pen. So it gaps up, just a little bit of a gap up, not much. It continues and then rolls over at the end of the day. Pretty hard slam right there. Then it gaps down. There's a gap right there. It gaps down. Starts to rally, gaps down, and then boom, rallies. And so, most of the day it's still in this channel, and so it's hard to trade that. And then it gaps up on Monday, rallies, and then rolls over. And so these gap continuations, roll over, gap down, just this snaking reversal pattern is just hard to trade. Here we gap down here, and it chopped. It didn't completely. It almost reversed here, and then it slammed down, and then it reversed. And so this was actually a profitable trading day because had some shorts that followed through and got out near the lows. But these last 3 days have been really choppy with these gap continuations and reversals. So very challenging. I want to show you some strategies that capture that. You see now the SR CounterTrends just stopped out near the highs. It's a good short, really. Getting short in here is a good place to get short the NASDAQ, but we're using fairly tight stop loss, $800. So bigger stop losses would have worked well today. You see that happen in these others. All 4 of these SR CounterTrends that got short today were stopped out near the highs because there's just this surge. There tends to be a gap. What I'm talking about, there tends to be a gap in the opposite direction of the short-term trend. So if there is a gap up in the opposite direction of the short-term trend, the market's really strong at the open. And so we'll see that here. I have some strategies I want to show you. So SR CounterTrend is not a gap strategy, but a strong gap reversal move like this would hurt it. So this pattern actually works well since the pandemic and the NASDAQ. Let's look at the strategy performance report. When the trend is down, we define the trend being down. It gaps up by a certain amount. We buy with a $1,000 profit target. Here are the results since. Here's the pandemic. It started right here, March the 1st. So since March the 1st, this has just been a credible strategy to trade, and it's not typically an incredible strategy to trade. So there's March 1st, and just massive move up. There's a little bit of a pullback recently, though. So most of the time, this is without slippage and commission. So most of the time, this equity curve is not a good pattern to trade. But you see the exact same thing in gold. In gold, it actually works pretty well since 2017. But you can't really determine that it's working great until the pandemic. So the pandemic started right here. And here is March of 2020, and so really it does well. Before that, it does this. It's not really much of anything, but this really defines it. It says, okay, the trend is down, the market gaps up. We're going to go with it and reverse the trend. If the trend is down, or if the trend is up and it gaps down, you see that here. So right here in the NASDAQ, the trend is down. Gap up, boom. Today it's a loser. So you see that long signal not capturing that 1,000-point profit target. But here it is, trend is down, gap up, you go with it. And typically that doesn't work. Trend is down, gap up, you go with it. And then you see several losers in a row. It's not doing as well lately. Trend is down, you gap down, you go with it. And so it's just a day trade strategy. Let's look at it since March 1. So you can see how well it's done. This is going back to 2001. Let's look at it through March 1. So here is the performance summary. Since March 1, it's up 19,140, 75.60 drawdown, 294 average trade profit. Here's the equity curve. Like I said, it could be ending. This pandemic pattern could be ending in the NASDAQ. It's unusual to do that. It's not normal. Normal market dynamics. Markets don't typically trade that way. Anything could change. It could be a new regime change. Gold, same thing. since March of 2017 or October 2017. Low drawdown, 104 trades, 132.50 average trade profit. So a pattern I'm keeping my eye on. This pattern would hurt trades in SR CounterTrend. If this pattern is strong, then it does hurt a strategy like SR CounterTrend, even though SR CounterTrend is not a gap. It's not a gap fill type strategy. We're not trying to fill a gap down. So it's not even necessarily looking at gaps. So that is gap fast in a pattern I'm looking at called a pandemic trading pattern, really accelerating.